to start this session.
I think we can start.
Yeah, sure.
Good afternoon, ladies and gentlemen. Warm welcome to this knowledge session on forex management. This session has been organized in consideration with the growing Indian economy, focus on increasing foreign trade, along with the rapidly developing investment opportunities. I would like to thank our knowledge partner, Myforexeye, India's premier full-service foreign exchange company, working closely with very reputed organizations. Taking the session forward, I'd like to introduce Mr. Anand Tandon, the founder and the CEO of Myforexeye, a financial market veteran with 2 decades of experience in the BFSI sector, and Mr. Ritesh Victor, co-founder and country head at Myforex Fintech Private Limited, who also has a wide experience of more than 20 years. I would like to thank all the participants and for joining in this knowledge session, and hope all of you will have some relevant applications. With these words, may I request Mr. Tandon to please take over. Thank you, Mr. Tandon. The floor is all yours.
Yeah. Hi everyone. Good afternoon. This is actually Ritesh Victor, the co-founder here. Mr. Tandon is usually not there. I am the one who usually does the webinars. Okay. So anyway, great seeing everyone. It's a pleasure and an honor to be here to share wisdom and knowledge and understanding of forex market. In the next probably 1.5 hours, we'll try and learn as much as we can. Some of the observations, some of the insights that we have learned being in this market for so many years. As usual, I will just show my presentation. Just before I start, one small request. I'm sure all of you must be having a lot of questions. So we specifically have a question and answer session towards the end of the webinar. So if you have anything, you can type it out on our chat box, and I will address one after the other as soon as this ends. So I want to ensure that I address all the questions that you may have. So please feel free and please feel open to type out as many questions as you want. Okay, so I'll just try and share my screen now. Okay, can everyone see my screen? Rohit, you can see my screen?
Yes, Ritesh, very well.
Okay, great. So let's start. So warm welcome to each and every one of you. Okay, what we want to explore is this following few points. The agenda for this meeting are the following few points. Being in this market for so long, what we have tried to address in this webinar and a lot of webinars that we are doing for the past 6-7 months is to highlight the few problems that has been there in India for a very long time, specifically with exporters and importers, MSMEs and middle corporates, large corporates. And we want to try and address those problems. I want to give you solutions to those problems. I don't want to highlight the problems, but I want to give you the solutions. How you can use technology, how you can use information, and how you can use knowledge to manage these kind of complexities. Okay, so the broad agenda is, first, the biggest problem that you face in India is about managing the exchange rates. Okay, I will delve down deep into understanding what is the challenge, and I also will give you a solution as to how you can overcome this challenge. Okay. The second point, again, very interesting for all exporters, even though the conclusion is for exporters, the research and finding is equally important for importers as well. All exporters come to me and tell me that, Mr. Victor, dollar is always on an uptrend. A few years back, it was at 60, then it was at 65, now it's at 75. So if it is always on an uptrend, why should an exporter hedge? Okay, in fact, the importer should hedge because it's always on an uptrend and you need to protect yourself. So we have done a research, an exclusive and conclusive research that we had done for the last 21 years. I'll delve down deep into that as well. I will also want to look at what the exporters can look at optimizing interest costs on their working capital. Okay, all exporters, they get export orders, they need working capital funding to run their factories and machines. And how do I optimize the interest cost? Because various funding facilities are available, which is the most optimum funding facility that I should use to ensure that my interest cost is the lowest. And we will have a small demo of our mobile application. Our mobile application is something which we have invested a lot of time and effort, and it addresses a lot of practical forex challenges currently. So that will help you. We'll give a demo to make you understand how you can use that application to overcome these forex challenges. Okay, and point number 5 is something which everyone asks me. Probably I would have done some 150 webinars and trainings till now, and this is something which everyone asks me, Mr. Victor, where do you feel the currency is going? Is it going up or is it going down? So obviously no one knows where the future is, but we'll try and make an estimate and do a value judgment in terms of where the currency is headed. Is it headed to 72 or is it headed to 78? We'll try and make an evaluation impact on that. And then towards the end, obviously the floor will be open. You can ask your questions, and I'll try and give my answers to the best of my ability. Okay, so ladies and gentlemen, let's start. Okay, managing forex rates. Probably the most critical challenge in Indian markets about the exchange rates. Now, why I say it's a very critical challenge is because in India, there is a huge lack of transparency about forex rates in India. I'll show you a couple of slides here. Before I come to this, I want to show you this. Okay, the first line is something that I hear from everyone. I always feel banks overcharge while converting forex. That is primarily because there is a huge lack of transparency of exchange rates in India. Unlike equity prices, which are very clear and transparent on online platforms, exchange rate is not something which is clear and transparent. You get a rate on the public domain. Those rates are delayed. They are not real time. And, forward premiums are not there. Then a lot of market variables which should be there on public platforms are not available. Whenever I'm converting my foreign currency, either for exports or for imports, I just get one rate from the bank. I have no idea how the rate is arrived at. Okay, so as of now, that is a very big challenge. There's also a challenge of what we call as bank margin. Bank margin is typically the compensation that you pay to the bank for every forex transaction. Okay, so since it is a cost to you, what we have seen is this margin is very flexible and this margin is unclear and variable. Now, if it is unclear and variable, understand that then it is in the bank's favor. So what all of you as exporters and importers should do is understand that bank margin is a cost to you, and you need to ensure that this bank margin is fixed and clear and transparent, and it is not variable. Cost cannot be variable. Costs have to be fixed, and costs have to be very clearly communicated, and it needs to be transparent. Now, whenever there is a rate that is transacted, there are various components of that rate. I will explain you what the components are in the next couple of slides, but understand there are various components in the rate. But what I get from a bank is one rate. Let's take I'm an exporter and I converted, let's take $500,000, $5 lakh. Then I just get 75.10 or 75.07 as one net rate. I don't know what the spot was. I don't know what my bank margin was. I just get one rate. How did it arrive at is something which is very hazy and unclear. So typically that favors the bank. We need to be smart and confident enough in terms of understanding what is the rate and what is the rate that I should have got. I'll explain you that methodology. Another very big problem with Indian markets is that the rates are very volatile. Within a day also, the exchange rate moves by around 20 to 30 paisa. If you see today itself, the exchange rate has moved from 75.0100 to it closed at 74.65, 74.60. So there is a 35-40 paisa movement in one day itself. So all exporters and importers, since they are busy in their activity, they are not able to take advantage of this rate. An importer could have saved 30-35 paisa, an exporter could have saved 30-35 paisa. When to save, how, and how to manage and take advantage of the volatility is something that is big time missing. Understand one more thing, all the data, all the information, all the real-time prices are available to the bank. Okay, it is not available to you. It is available. It's not that it is not available to the public. It is certainly available. The only worry is those real-time prices and rates come on terminals, and these terminals are very expensive. But banks, being large corporations, they can afford these terminals. So they use these terminals. So the information and data is favoring the bank. The MSMEs, the corporates, they see the rates, they see on public platforms, and rates on public platforms are delayed and they are not real time. So the data favors the bank because they have the real time access. Okay, so we are trying to address those problems. We have a mobile application which will give you real time prices. So that will address the rates part. But in addition to the rates part, the knowledge and understanding of the Forex transaction, what is the transaction that I'm doing? When I'm converting $5 lakh at 75.07, what is the actual transaction that I'm doing? Awareness of that is very, very critical. I'll explain to you in the next couple of slides. Okay, now let me take an example to explain you how the rates are calculated or what are these rates. Okay, understand one thing, whatever the rate that is quoted in the terminal or the rate that is traded, the standard rate that is traded is something called the spot rate. Okay, we call it the spot rate. That is the benchmark of all rates. Now, what is a spot rate? Spot rate is the rate that is used for any settlement 2 working days later. For any settlement, spot rate is used for any settlement that is used for transaction settlement 2 working days later. What does that mean? That means that if I see 75.07 as the spot rate and I want to convert my dollar now and I want to get a credit or a debit today itself. If it is an export, I get a credit today, or if in an import, I get the debit today. So if I want to get a credit or debit today itself, then 75.07 will not be used. It will be used as a benchmark, but there will be other calculation variables that will be used to arrive at the net rate for today's conversion. Okay, so understand that spot rate is for any conversion for a settlement 2 working days later. Then the next question is that what if I want to settle the transaction today? When I say settle, it means a debit and credit in the account. What happens if I need to get the debit or credit today itself? If you need to get a debit or credit today itself, then there is a component called cash spot. A component called cash spot that is used to adjust to the spot rate. Cash spot is subtracted from the spot rate to arrive at what is called as the cash rate. And cash rate is the rate that is used for settlement today. So if you want to do settlement today, it is called a cash transaction. Similarly, if you want to do a settlement tomorrow, because that is T+1, spot is T+2, I want to do a trade today. I want to fix the rate today, but I want the debit or credit to happen tomorrow. That is called a TOM rate. TOM rate again is calculated by using spot rate minus what you call as cash TOM. Minus cash TOM. Okay. And if you want to do any settlement for a future date, let's take you have an export order or you have an import payment after 1 month or 2 months, and you want to fix the rate. So you can take a forward contract. So you can take a forward for a settlement in the future date. That will become a forward. So anything beyond spot is called a forward. I have a small table here. It will help you in understanding all the variables very clearly. Okay. As I said, for cash, TOM, spot, forward, spot is the benchmark. For cash, if I want to settle today, cash spot will be subtracted. Then obviously for exporter, margin will be subtracted, and for importers, margin will be added. So understand, bank margin is that cost, is that compensation that you pay to the bank for all Forex conversions. Okay, so for cash transaction, I have a spot rate, I have a cash spot, and I have a bank margin. For TOM transaction, I have a spot rate, I have a TOM spot, and I have bank margin. So the two components that are fixed for all transaction types are the spot rate and the bank margin. And depending upon the transaction that you do, cash spot, TOM spot, or forward premiums will come into the picture. Okay, so very critically, all of you, all exporters and importers, whoever does forex transactions, need to understand first step, what is my transaction type? Am I doing a cash transaction? Am I doing a TOM transaction? I'm doing a spot or a forward. So depending on the transaction type, your rates will change. Okay, there is a calculation methodology, and on that methodology, the net rate is calculated. So understand one thing, whenever you get a bank's advice that $500,000 or 6 lakh euros are paid, and it is paid at a net rate, at one rate, understand that rate is calculated and derived and arrived at. So you need to take control of that rate. You need to ensure that you get the right spot. You need to ensure that the bank margin is clearly and is fixed, and it is clearly communicated and transparent to you, and that you get the cash spot. Importers, remember, cash spot is subtracted, so it is a benefit to the importers. And since it is subtracted and the rate gets lower, it is a cost to the exporter. So understand, cash spot is a benefit to the importer and a cost to the exporter. So understand this transaction type, understand how the calculation methodologies take place, get real-time prices, which our mobile application will be able to do for you, and then you can get control of the rates. In fact, we have created the app in such a way that you get the rate for any transaction that you select. Cash, TOM, spot, forward for the next 1 year. So it's a very user-friendly, easy app. All the calculation methodologies, all the mathematics, the app already does. Okay, great. So we have understood the challenge of rates, and then we have also understood how to overcome it. Okay, this is what I showed at the first place. Now let's come to another very important aspect about what exporters and importers tell me equally. Exporters tell me, Mr. Victor, dollar is always on an uptrend. Why should I hedge? I know that I'm going to get more rupees per dollar for the future because dollar will always remain in uptrend. Similarly, importers are fearful. Importers come and tell me, Mr. Victor, dollar is always on an uptrend, rupee is always weakening, so I need to hedge. So is this the reality or is this a myth? What is the facts and what are the figures? I will try and show you what a research that we have done for the last 21 years. The questions that we ask for such kind of interactions is, does the rupee always weaken? Okay, no, rupee weakens majority of the time, but it gains also, like the way it has gained in the last 4 or 5 days. From 75.30, 35, it has come to 74.65. It's almost about 70%, 70 paisa, which is 1% gain in the last 4 or 5 days. So rupee does not weaken always, it gains also. What about the forward premiums? Whenever you do a forward contract for a future, you get a premium, right? There is an addition of the premium. You get 4.5% as the forward premium. So that is one adjustment that you need to make for this calculation and for this evaluation. Are we looking at the complete picture? Okay, let me tell you, very interesting, the research that we did and what is the conclusion of that research. Okay, now, ladies and gentlemen, these are all facts and figures. Okay, this is not a view or a recommendation. These are all actual facts and figures. So any one of you who want to independently verify and audit, you can do it, and the results will be very similar. It will not be different. What did we do? You know, each working day, every working day from the 1st of Jan 2000 onwards, we did every working day, we did 3 forwards. Okay, we did a forward for 3 months, we did a forward for 6 months, and then we did a forward for 12 months. Okay, every working day, we did 3 forwards, 3 months, 6 months, and 9 months. And when you do a forward, you get the forward premium. So exporters receive the forward premium, importers pay the forward premium. Okay, so you get a forward rate, which is spot plus the forward premium, you get the forward rate. On the maturity, which means after 3rd month, every day, since we have done the forward every day, so the maturity will start after 3 months and the maturity will be every day. So all those maturity days, each and every maturity day, we compared the forward rate with the spot on that date. So simply put, if you do a forward, you get the forward rate. If you don't do anything, you get the spot at maturity or the spot at that particular day. We just did a comparison between this forward rate and the spot at maturity. And we try to find out what is actually the difference between the two. Okay, so in simple terms, when you do a forward, you get the forward premium. So it is actually the forward premium that you get. So what is that percentage of forward premium that you received on the long-term basis? That is what you receive, an exporter. And the natural rupee depreciation is the risk. The natural rupee weakening is the risk. Okay, so if you don't do anything, you get the natural rupee weakening, natural rupee depreciation. But if you do the forward, then you get the forward premium. So it's one way, a simple comparison between dollar INR forward premiums and the rupee depreciation. Okay, so the data is very interesting. Let's find out the results. 3 months, 6 months, 12 months, we did 3 categories of forwards. So the average forward premium for the last 21 years, from 1st Jan 2000 onwards till now, 18th of Feb 22 till now, the average forward premium has been between 4 to 4.5%. Average forward premium that I receive is around 4 to 4.5%. The average rupee weakening is 2.7% only, which means if it was 65 a few years back, now it is 75, then the average weakening is 2.7% per annum. But the forward premium that I'm getting by doing a forward is 4 to 4.5%, which means that if you consistently do forwards, you gain anything between 1.3 to 1.75% per annum. A free gain of 1.3 to 1.5% per annum if you consistently do forwards. There are a whole lot of trades. There are about 200, 220 working days in a year, and there is 21 years. So it is 5,000 plus number of trades. And the number of successful trades, when I say successful trades, what does it mean? It means forward rates higher than the spot at maturity. For an exporter, that is the benefit. I get a forward rate which is 75, but the spot rate on that day was only 74. So I get a higher forward rate. So the percentage of successful trades was 65%. Okay, which means 100 times you do, 65% of the time you are correct. You are wrong only 35% of the time. And the net is 1.3 to 1.7% gain. Remember, this gain is not the average of only the gain. This gain is the average adjusting the losses as well. Okay, so 35% of the time you have lost, 65% of the time you have gained, and the net of gains and losses both is 1.3 to 1.7%. Okay, so this is a startling fact. This is actually the fact. There is no myth. The myth is that dollar is always on an uptrend, rupee is always weakening, so I should not hedge. The exporter should not hedge. Actually, if you hedge, the forward rates that you get, the forward premiums that you get are 1.3 to 1.7% higher than the actual weakening. So the thumb rule for generally all exporters is you should regularly hedge. Not only it eliminates uncertainty, but in 65% of the time, it turns out to be profitable also. And the corollary or adverb for the importers is you should not regularly hedge. You should hedge when the rupee is strong. You should hedge when the levels are comfortable compared to your original rates. Okay, so this analysis is not only for exporters, this is for importers as well. Facts and figures tell exporters should regularly hedge. In the long term, you will make money. Importers should hedge minimum. Because if importers hedge, 4.5%, 4.5% is the premium that you pay. You have to pay the premium, right? Because you are trying to hedge a liability of the future. So you have to pay the premium. So what you are paying is 4.5%. But what is the rupee weakening risk? The risk of rupee weakening is only 2.7%. So importers should selectively hedge and exporters should extensively hedge. That is the crux and the bottom line. Okay. Again, ladies and gentlemen, I'm sure you're going to have a lot of questions. Please type it out on the chat box, or you want to speak up. We'll try and see and address it towards the end of the session when we have specific time for question and answers. Okay, so let's progress. Let's move ahead. Now, this is another thing which a lot of people ask me whenever they are wanting to do a forward. They say that whenever I do a forward, I have the choice of the maturity being 1 day or the maturity being a window. Okay, and you can put the window to any way. The maximum, as of now, the current FEDI RBI rule says that the maximum period is 30 days. So you can put from 1st to 30th, you can put from 15th to 14th of next month. Maximum is 30, so and minimum is 2, because if you do 1, it is a fixed date. So 2 to 30 is a window period, and you can put it anyway. You can have 15 days, you can have 30 days, you can have 10 days, whichever way, it is customizable. So the question is, which one should I use? Should I use a fixed date maturity or should I use a window forward? This is very simple. If you do a window forward and you're an exporter, you receive premium only till the first day. You receive premium only till the first day. For example, if you do a window for, let's take 1st to 30th of April, you receive premium only till the 1st of April. So if your money comes in on, let's say, 20th of April, you have lost the premium for 20 days. Conversely, for an importer, if you do a window, you pay premium till the last day. In the same example, if you take a window forward from 1st till 30th, you pay premium till the 30th. And if your payment is to be done on 20th, then the premium from 20th to 30th, you have paid extra. So the conclusion is you should do a fixed date forward. You do a forward for the month end, exporters or importers. Importers anyway have fixed timelines. You do a forward for that particular date when you want to make that payment. Because in that case, what happens is, if you make that, take a hedge or take a forward for that date, and your receivable comes, let's take 5-6 days earlier, you can always early utilize the forward. You just need to pay back the differential of premium back to them. Okay. So the bottom line is, whenever the premiums are high, actually for that window period, you're losing the premium. And now when the premiums are around 4.5%, it comes to around 25 paisa per month. So if you do a 30-day window, you lose straight away 25 paisa per dollar. And 25 paisa is quite large. So the thumb rule is, whenever the premiums are high, you do fixed rate forwards. And whenever the premiums are low, and in fact very low, then you can do a window. Because even if I do a window, I will lose only 3-4 paisa of premiums, because the premiums are anyways very low. Okay, so this is something which all of you should apply and immediately implement. If you are doing forwards, the forward should always be fixed date forwards. There are adjustments, but the premiums that you get, it will always outweigh the lack of flexibility. A lot of people tell me, I do a window forward because I am flexible, I can pay it anytime. But that flexibility comes at a cost, and that is quite a substantial cost now. So the prudent sense is, use the fixed date, try and reduce that cost as much as possible. Or if you are an exporter, try and get the maximum premium as much as possible. Okay, good, great. So let's go on to the next topic. Again, very interesting about working capital management. The ideas that I'm going to give you, I'm sure if you are doing it already, great, fantastic. But if you're wanting to learn and tweak and try and optimize your interest cost on working capital of exports, I can give you a lot of ideas. So let's dive. For all exporters, specifically MSME exporters and non-MSME exporters also, there was an interest subvention that was available to exporters. If you take working capital, export working capital, what we call as packing credit, if you take packing credit in INR, understand one thing, all exporters are eligible for packing credit or a working capital funding for export proceeds. You can take a packing credit loan from the bank. The question is, I can take that packing credit in foreign currency, I can also take the packing credit in INR. And since it is a loan, I need to know which is more cost efficient for me, which loan I'm going to pay less interest. That is the focus. Now, as I was telling you, till 30th of September last year, 2021, there was a subvention scheme available for MSME exporters in India, MSME and non-MSMEs as well. MSMEs used to get 5% and non-MSMEs used to get 3% subvention. That has been stopped from 30th September, but there is a lot of directions and indications from the Ministry of Finance and as well as from Commerce Ministry that this is going to come back in some way or the other. Okay, there is an increased allocation also in the budget, but it has not come out as yet. Probably Ministry of Commerce is still trying to come out with the regulations. It has not come out yet. But if it comes out, if the subvention is there, then how do I take the packing credit? If the subvention is not there, how should I evaluate the packing credit? In the next 2-3 slides, I'm going to tell you. And if you do it, I'm sure if you do it the right way, the cost efficient way, you're going to save a lot of interest cost. Okay. So as of now, let's assume the subvention was there. 5% was there for MSMEs and 3% for non-MSMEs. So let us evaluate. If I take PCFC, what is my interest cost? If I take PCINR, what is my interest cost? PCFC is very simple. You will have SOFR or the earlier LIBOR. Earlier it was LIBOR. Now it is SOFR, short-term funding rate. So if you take a packing credit in foreign currency, in dollars, you get SOFR for dollar, which is typically 6 months is around 0.2, 0.3, 0.4%, very small amount. But the bank spread is around 2.5%. So overall PCFC cost is anything between 2.2 to 2.7%. Okay, this is simple packing credit in foreign currency or working capital loan in foreign currency. But if I take a packing credit in INR, how does that work? How is the cost element working? I'll tell you. Typically for MSMEs, the cost elements were 7-8% is the funding rate, PCINR rate. You get 5% subvention. So 7-8 minus 5, there is a straightforward reduction. But there is a big catch here. What is the catch? Understand that all exporters are taking packing credit in INR. I get an INR now. Okay, let's take I am an exporter. I get INR now. But this is a loan that I've taken from the bank because I need to run my machines. I need to purchase my raw material. I need to pay my labor. I need to run my factory. So a lot of overhead costs. So I have got an export order. Based on that export order, depending on that, I take a packing credit loan from the bank. And this loan I have taken in INR, I pay 8%, but I get 5% subvention. This loan I have taken in INR, but I'm going to repay it from the foreign currency proceeds that I'm going to get after 3 months or 6 months. Understand, this packing credit loan in INR that I have taken, I am going to repay it after receiving the foreign currency receivable. I'm going to receive a foreign currency receivable because I have exported my goods. I will receive my money. I'll convert my money and then pay the packing credit. For that future conversion, you can take a forward contract. And if you take a forward contract for this future conversion, you get 4.5% of forward premium. So if you reduced the PCINR cost minus 5%, minus 4.5%, your net interest cost is 0. Actually, your net interest cost is negative. Your net interest cost is 0 to negative. Similarly, if you are a non-MSME and you're eligible only for 3%, even then it makes a lot of sense because 3% subvention, 4.5% forward premium, 7.5% benefit. And for non-MSMEs, the PCINR rate is anywhere between 6 to 7%. So again, your interest cost is 0. So very important to understand, ladies and gentlemen, whenever you're taking a packing credit, evaluate the cost element. Okay. So this is the simple working that I've shown. Let's take, you want to take 10 crores of packing credit in INR for 90 days. I need the loan for 90 days because by 90th day, I will ship my goods. I will get my receivable. Okay, this could be 90, 120, 150, depending upon the industry or the trade cycle that you have. Okay, so I take 10 crore loan now. I convert that to, at the current rate, 75 or 74, 65, whatever is the rate, I get an equivalent dollar, and I can use that dollar to take a forward contract. And when I do a forward contract for that 90 days, 120 days, 150 days, I get 4.5% forward premium. That reduces my interest cost and gets it to zero. And on that maturity, after 90 days or after 120 days, when I get my foreign currency receivable, I will use that forward contract to convert it, where I've already got 4.5% higher. I will use that forward contract to convert that foreign currency into INR and then repay the packing credit in INR. So a very efficient system, you can reduce your interest cost to zero. Okay. Now, okay, Mr. Victor, this is fine, but now there is no subvention. So what do I do? So if there is no subvention, do the same mathematics. The only thing is that 5 and 3 will not come, but 4.5% will come. So PCFC remains the same, 2.2, 2.7%. There is no change. But for PCINR, just see what is your interest rate. I just spoke to a large exporter yesterday. Earlier, his PCINR rate was 8%. Yesterday, he got a sanction for 6.5%. Okay. In fact, there is another client who got it for 6%. Okay. So if your packing credit INR rate is 6.5%, okay, and you get a forward premium of 4.5%, then your interest cost is only 2%, which is still lower than PCFC. If you are a euro exporter, again, very interesting. If you are a euro exporter and your PCINR rate is 6%, 5.5% is the forward premium for euro INR. 5.5% is the forward premium for euro INR. Okay, so 6 minus 5.5 is only 0.5%, which is again cheaper than PCFC. So what is the thumb rule? The thumb rule is whenever the interest subvention is available, take them blindly. It's a no-brainer. Take PCINR, avail the subvention benefit, do the forward contract. Okay. If interest subvention is not available, calculate my cost elements. What is my PCINR rate? What is the forward premium that I get for that currency if I do a forward contract? Okay. So if PCINR rate minus the forward premium is working out to be cheaper than PCFC, take PCINR and take a hedge. If PCFC is cheaper, take PCFC. What my intention of telling to all of you is, whenever you're taking a loan, evaluate these parameters, evaluate these variables, the cost elements. Understand it is a loan. So the focus of my taking that loan is to reduce that interest rate as much as possible. And I'll try my best. I'll try the best that I can to reduce the interest rate. Okay, because that is the ultimate cost that is going to come to me. Got it? So I will use the technology part, but there are a couple of questions. So I think I can just take the questions and then come to the mobile application. And obviously, any more questions that come in, I will take towards the end of the session. So let me just try and take these questions. There are two. Okay, so thank you, Mr. Narasimhan, for that interesting insight compliment. Thank you so much. I hope you like it and everyone likes it. And I hope everyone benefits out of it. That is why we are here. Try and share the wisdom and the understanding as much as we can, and people benefit out of it. Yes, Mr. Verma, all of you will get the presentation. I will ensure, and I will ensure that ICC gets this PPT, and everyone, all the participants get a copy of the PPT. Okay. Okay. One question I want to answer. Mr. Hitesh is asking, what are the standard bank margins for Forex? Okay. Mr. Hitesh, there is no ground rule to decide or define a bank margin, but I can give you some insights. See, bank margin is, as I said, the cost to you and the compensation to the bank. So bank margin typically depends on 2-3 big factors. The first very important factor is your forex turnover. If your forex turnover is very high, let's say 500 crores, 600 crores, or whatever, if the forex turnover is high, the margins cannot be high. So higher forex turnover means lesser bank margin. First thing. Second thing, it also depends on your credit rating. Remember, it is a charge that the bank charges you. So if your credit rating is good and A plus and AA plus, then your bank margins will be lesser. Understand one thing. I'll give you a very simple ground rule of how to get an idea of the bank margin. Let's take you to 100 crores of business, 100 crores of exports, or 100 crores of forex turnover, for example. So 100 crores, and let me assume that it is all dollars. So 100 crores divided by 75 is typically around 12 and a half, $13 million. Okay, let's take it is $13 million. If you keep 10 paisa as margin, then for $13 million, 10 paisa is 1.3 lakhs. Okay, 13 million, and I do 0.1, no, sorry, 13 million, and I do 0.1, then it is 13 lakhs, sorry, not 1.3, 13 lakhs. So for $13 million, 10 paisa, you are paying 13 lakhs to the bank. So now you should evaluate. Just for conversion charges, should I pay 13 paisa to the bank? 13 lakhs to the bank? In fact, should I even pay 5 paisa? If it is 5 paisa, then it is 6.5 lakhs. So evaluate from that perspective. Understand your credit rating, your forex turnover, what is the margin on an annual basis, depending upon my forex transactions, how much I pay to the bank. That should give you the answer. Okay, now a lot of questions. How do you see euro and Australian dollar? Mrs. Narsimhan, I will take the view towards the end. I will give you a view on dollar. That will also give you some kind of a view on euro and Australian dollar as well. Okay, so I will explain the view. It is there in this presentation towards the later part. And when I'm finishing that, I will give you the view part. Okay. Okay, presentation. Okay, sir, packing credit services are available to any exporter. Okay, the question that you have is whether am I eligible for subvention? Typically, software companies, a lot of services companies were beyond outside the purview of subvention, but I think the government is trying to include them as well. Packing credit will be available to all exporters. Okay, only the subvention is the criteria, whether consulting or software companies, will they get subvention or no? That is doubtful, because earlier part when the subvention was there, consulting software companies were not getting, consulting companies were also not getting. Understand why the subvention is there. Subvention is there to promote exports, but which kind of exports? Typically it was labor intensive, employment generation in industries, sectors, and places where the government wanted to put focus on. I'm sure consulting and software are focus areas, so probably they might include it. But generally, to answer your question, any exporter, whether it is a manufacturer exporter or a consulting company exporter or a software exporter, they can take packing credit services, packing credit facilities. Okay, great. So I will call upon Akhtar to give a small demo on the mobile application, how we developed this application, and how this application is going to help you in overcoming the challenges in terms of the rates, the research, the alerts, everything. Okay, so over to you, Akhtar. Akhtar will give probably 10-12 minutes of the presentation in terms of explaining the mobile application. Then as soon as he is done, I will come back and take the questions and the view part. I want to give the view as well, where the dollar is going, where our assessment of the dollar is, and I'll also give you an indication of euro and Australian dollar as the audience have asked. So Akhtar, over to you. Okay, so I will just take off my share for a while, and then I'll come back in again. Okay, Akhtar, where are you? Akhtar Faruqi. So, Dipto, can you just give Akhtar Faruqi the right to show the mobile application from his mobile? Sudipto, are you there? Paromita, Sudipto?
Yes, Mr. Victor, I'll just see to it. I'll just see. Shuman,
Yes, Paramita.
yeah, can you help with what Mr. Victor is saying?
Okay,
could you-
Suman, there is
Yeah.
a gentleman called Akhtar Faruqi in the attendees list.
Okay.
Okay, can you just give him the hosting rights? He needs to show our mobile application.
Just a second. What is the name? Could you please repeat?
Mr. Akhtar Faruqi. Akhtar.
Yeah. So I'm promoting him as a panelist so that he can share his screen.
Yeah, sure. Please do that.
Mr. Akhtar, please accept the invitation.
He just said he has accepted it.
He is here.
Hello everyone, this is Akhtar. I believe that my screen is visible to everyone.
Yes, Akhtar, we can see your screen. We can see ICC. Yeah.
Yes, okay. So I'm moving on to the app. So people can see the application's main interface.
Yes, Akhtar, I can see.
Okay, so this is our application's main interface, corporate FX. I hope that people can see all the currency pairs with the fluctuation numbers, all these bid and ask real-time spot rates of different currencies. USD INR, it is the NDF data, HGD INR, JPY INR, GBP INR. So these are the spot rates. The benefit of the spot rates that these are the interbank rates. And while you do the conversion with your banks in the real time, now you can track it down. So if there is any pilferage, if somehow the bank is trying to overcharge you in the name of margin, you can have these interbank rates and you can find out that if the rates are fine. Now, if we move on, these rates are not very simple. They have come with a number of components. So let's suppose that in USD INR, you can see bid and ask. So here bid, it's in the layman's language, bid it's for exports, for inward payments, and ask it's for imports, for outward payments. If for inwards, under bid, you can see 74.6420 for USD INR pair. You click over the rate and it will direct you to the calendar. This is the calendar. You can see it gives you all the forward rates with premiums up to 1 year. These rates, these premiums, this calculation, it is not available on the internet or on any other platform. The data comes in raw form, and the sources are very costly and expensive. So if you get the terminals, then only you can get the raw data, then you have to compute, and then you will find out, okay, what is the premium for a specific date in the future. Here, the best part is that this application simplify all the calculations for for an exporter or importer. So you can do the negotiation part with the banker, with the treasury people. If let's say under USD, you can see there is a bank margin, and let's say you have a fixed margin of 10 paisa with the bank, you can fill your 10 paisa and you submit. Now this margin has been adjusted to all the rates in this app. And let's say, let's go one by one. Let's say that you are going for a cash conversion. You have some dollars or any other currency. You want to get the conversion today itself on 18th. If you go, you can see this page. At the bottom, you can see the pricing breakup. This pricing breakup shows that spot rate is 74.5473 in the real time. Cash spot is 0.045. The margin is 10 paisa, and the net rate should be given as a cash rate 74.5009. That's how a rate, it gets computed. And normally people or exporters or importers or their finance people even, they don't have enough information and all this expertise, so they don't know how to deal with the bankers. And bankers used to take the advantage of it, and they do their job of making maximum revenue for their companies, for their banks, by charging you. So here, this is the cash rate. Let's say that you are going to book a spot rate. You click spot, which means that it will get converted in 2 working days. T+2 concept is applicable to this transaction. In spot, you can see that cash spot has been removed now. The spot rate is 74.537, 10 paisa margin, adjusted rate is 74.537. This rate should be given it should be given in the real time. And if there is any difference, you can do the negotiation with your banker, the treasury people, and you can ask them to provide you the correct rates. Now, if we go to the forward, let's say we go back to the calendar. If you guys do hedge, you book forwards for your export payments, for your export forex exposure. Let's say that you have some orders today and you know that you are going to get these payments in the end of July. So we say that you can book a forward rate of 29th of July. And here you can see the whole calculation that spot rate is in the real time 74.6439. And one more thing I would like to mention, that during this conversation, you guys can see that spot has been kept changing. Now it is 74.63. So this is the real time thing. If during the conversation there is a benefit impact on the rate, you can ask your banker to give you the updated quote. Now you see that premium is 1.3372 you can gain, and margin is 10 paisa. So net rate is 75.8742. Now it is 8807. The best part is that the name of premium, because premiums, they are not available on internet or over Google or XE. So bank used to overcharge a lot because you don't know exactly what premium should be given to you. Even if right now you see that you can gain a premium for 29th of July, the premium of 1.3372, But if bank offers you a premium of 90 paisa and overcharging you almost 43 paisa, you will be happy because 90 paisa you will be focused on that. So here now, if there is any slippage, even of 1 paisa, you guys can verify it, rectify it, and you can save all those extra costs. Now you can see that rates are available, forward rates are available for up to 1 year. If we go for 27th of January next year, the premium is 2.8038. So these are the main, for exporters or importers, this main feature is applicable and it's very beneficial. That gives you the, you can say that advantage or the power that you can go with the banker and do the negotiation on your part. Another best feature is this. You can see this set forward price, this blank. Let's say that if you also study a material of market outlook, you having interest in forex market, and you have any idea that market will move in your favor, and you just because you don't have enough time mostly for forex exchange, then you cannot simply keep your eyes on the market 24/7. But you have the idea that okay, it seems that market will move on in your favor, and you just need to be notified when the market reaches the right level. So if you think that right now you can see, let's go back to the page. Cash spot. Let's say spot. You can see the spot is the adjusted final rate is 74.5404, and you say that I want to be notified if the rate goes up by 10 paise, which means 74.64. And if the rate will reach to this rate, 74.64, I simply want an email notification and an SMS notification. You create this alert. If the market will reach the spot rate, final spot rate will reach to that level, 74.64, you will get the notification. And you come to know that, okay, the market has reached to the levels, I can book my rate with the bank. Now, if we go back, the another part, you can see that if you are interested in reading about the market, we have these daily market reports, morning, afternoon, evening. Every day, 3 reports have been published by our experts. You can also see that in the morning we have given this range for USD INR, Euro INR, GBP and JPY INR. And this small reading is there. You can go and if you guys are interested in be updated with the market information, this feature is very, very strong for you. Then we also put premium research reports. We give daily trading calls, news, case study. It's very important for you people because I personally request everyone that if you have a little time, please spend on this feature. All these case studies are similar to your experiences. I'm damn sure that if you go through it, you will find out many situations where you lost money, and you will find out very familiar with these case studies, and you will understand that how we help out exporters. Myforexeye helps exporters, or any other expert helps exporters or importers to save their costs. Then apart from that, we also have this FX trading. People who are interested in doing forex trading, we provide brokers, and we also provide market insights, and we also provide other things. This application gives you other things like doing giving you knowledge and trainings for doing tradings. So I believe that Ritesh sir, these features are enough for exporters to understand. Is there any question that I can answer related to the application?
Thank you, Akhtar. What we'll do is I'll run my presentation as well, the last few slides, and then probably we can ask the audience to ask all the questions. Okay, so that if they have any questions, then we can jointly address. Okay,
Sure.
you be there as a presenter. Okay,
All right.
I will just log off from there so that I can get my PPT back. Right.
Now you will get it because I have stopped sharing
Yeah.
my
Thank
screen.
you, Akhtar. Thank you. Let me just get back my screen again. Okay, so this is what we covered on the app. Okay, this is the real-time prices on the home page, and then you can get the forward rates on the calendar itself. Any currency pair that you can select, you will get the forward rates for the next 1 year. Okay, and then you have the rate alert function, which is extensively used by everyone. You can make the system work for you. You did not look at the market the whole day to target the level to buy or sell. Okay, so you can make the system work for you. It is smart and efficient enough to take your commands and reply to your commands. And there's people who are interested in trading in FX can get trading signals as well. So this is very largely followed. Internationally, there is a lot of people who follow our trading signals on the international markets. And we are a RBI authorized money changer. So anyone who has any personal forex needs for international travel or transference or transfer of fees and all, we can help you out. Okay. Now let me come back to my presentation on view. Okay. Okay, great. So this is the question that I said everyone asks me. Is the rupee going to 72 or is it going to 78? Again, as I said in the beginning, it is future. No one knows where the future is. We are just humans. Okay, but we can make an estimate. We can try and make an estimate. I think, ladies and gentlemen, all of you can mute it. There is some noise that is coming from one particular end. I would request all of you to mute your mics. Okay, great. Thank you. Thank you. So let's try and make an assessment. Okay, now to everyone, and I think one gentleman was also asking in terms of the market view of where the dollar is or the euro is or the Australian dollar is. Okay, now whenever you want to make an estimate of the future, you do two kind of analysis. The first analysis is what we call as fundamentals, where you analyze the fundamentals of the market. And since it is dollar INR, so you will typically analyze fundamentals of US and of India, and then make a forecast. The second thing that you analyze is what we call as technicals. You analyze the charts. This is in itself a very detailed area of study, what we call as technical analysis of historical prices to make a forecast for the future. Okay, so we'll look at it one by one. So let's start with fundamentals first. Now, 2 or 3 factors I would want to point out here. Obviously, fundamentals, there are millions of them. There are a lot of factors, but 2 or 3 factors that I want to point out, and which probably will make a lot of sense to all of you. First is what we have on the top left, what we call as the rate hikes in the US. Okay. Now, all of us understand that since April 2020, March 20, when COVID struck first, a lot of central banks in the world were printing money. And because of that COVID-induced lockdowns and shutdowns, there was a lot of emergency funding that was required. Businesses were shut, people were not earning money, and obviously people had to be supported, businesses had to be supported. So a lot of central banks in the world printed money, or what we call as the economic stimulus, to be provided to companies as well as individuals. Globally, it was provided predominantly to companies, but in US, it was provided to companies as well as individuals. So what had happened is a lot of these money started flowing throughout the world. But now in its December meeting, the Fed, December and Jan meeting as well, the Fed very clearly indicated that all of these money printing will stop by March. And this is the second last month. And by the next month, all of this free money will be stopped. Okay, so if the money is stopped, then where will the inflows come from? Not only is the money printing going to be stopped, even they are indicating the interest rates which are at zero now, since inflation is going higher in the US, they are looking at 3 to 4 interest rate hikes in the US. Now understand, this is a very big change. You are moving from 0% to 1% or 1.5%, and you have completely stopped the stimulus. So there is a huge risk that inflows will not come into India, and because of fear of increasing interest rates in US, there might be a lot of outflows from India. Okay, so inflows reducing, outflows accelerating. That is, it's a nervous sign for rupee. The rupee might weaken. If it is outflow of dollars, then more and more dollars will be demanded, and the money will go out of the country. Okay, so this factor says rupee is going to weaken. Okay, now let me look at the other factor. Crude, as you all know, is a very big factor, and because of the Russia-Ukraine standoff, the crude prices has been going above the roof. It was static 50, 60, 70 for a long time, and then from 70, it quickly went to 95. It went to 95, 96. I'm talking about Brent prices. It went to 95, 96, and all of us understand that how much of crude we import to sustain industrial machinery in India. So we import a lot of crude. So higher crude means we need to buy more and more dollars. We need to pay more and more dollars. And the way Russia and Ukraine standoff is continuing, it is very unlikely that the crude prices will come down much. It might come down $5, $6, $7, but it is not going to be a substantial correction. So as long as crude prices remain high, the pressure on rupee will be there. So more and more dollars need to be paid to buy crude. Okay, so this is point number 2, second factor for rupee weakening. Now, I was saying Fed is going to hike the rates, they're going to stop stimulus. We have already seen the sign of outflows. If you would have seen the outflow in October, November, December last year, and Jan, Feb till now this year, we have already crossed $10 billion of outflows. And $10 billion for an economy like India is not very large, but it is not small. It is a decent amount. Bottom line is, we have seen good amount of FII outflows from equities and debt in the last 4 to 5 months. So this is also a negative factor for the rupee. One positive factor is the RBI, our central bank. Our central bank, all of us understand that they keep a very tight watch and vigil on the exchange rate. They don't let the currency to weaken too much. They don't let the currency to gain too much. And we have seen that the RBI is doing some kind of intervention mechanism between below 74 or below 73.80, above 76, 76.30, there is again some mechanism. So we feel 74, 75 is a place where RBI is comfortable with. Okay, and they have a lot of reserves, and they have the ammunition and the systems and the institutions in place to control the volatility. So RBI is a positive factor. But ladies and gentlemen, RBI is probably the only positive factor. All the other factors, if you look at fundamentally, all the other factors are a big negative for rupee. Another big negative for rupee was a recent monetary policy meeting that concluded a few days back, where the central bank RBI indicated that accommodative stance will continue, and we are not looking at interest rate hikes. So interest rate hikes in US is going to be very aggressive, and rate hikes in India is very flat. So again, the differential is going to come down, and that is the reason why we are fearing that we might see outflow of foreign currency or outflow of dollars from India. So overall, looking at fundamentals, my bet is that probably in 2022, this year, we might see a weaker rupee. Multiple reasons. I told you about interest rates. I told you about outflow of dollars. I told you about high crude prices. Bond yields are also a very important factor, which is again predominantly driven by interest rates. So bond yields are also high in US. In India, it is more or less stable and static. So a lot of factors to say that rupee will weaken. Fundamentally, it looks like the rupee will weaken. So let's try and see what does technicals indicate. See, in technicals, as I said, you are analyzing long-term charts. And since you're going to give a forecast for 1 year, you have to look at a lot of periods. So we looked at the last 10 years and we drew a weekly chart. This is the weekly chart that we drew. I want all of you to look at two colored lines. One is the red line, which is, if you see, it's a straight line, and it is connecting the lows of the multiple years. And the way it looks like, it is indicating support. The red line is indicating a support. And the support as of now is around 74. Also look at the blue line. Blue line is a moving line. Okay, it is not a straight line, it is a moving line. It is a simple technical indicator called simple moving average. So it's a 89-week moving average. Why 89 and why not 79 or 75? Let's not get into that discussion. It's a technical indicator. Just understand it is a technical indicator. And 89-week moving average, you know, market has been above this average for 8 years out of the 11. So only in 3 years out of the last 11 years has the spot or the exchange rate been lower than this blue line. So this blue line also in one way or the other tends to give a support level. So overall, if you look at technicals, both the red line and the blue line and the overall technical factors, it looks like that below 72, 73, dollar is very unlikely to go. Okay, below 72, 73, it is very unlikely to go. So if it is not expected to go below this, there is only one direction, and that is upward. So our view, more or less, is that this year we are not going to see any major rupee appreciation. We might see some degree of rupee depreciation. So if you ask me, today it closed at 74.65. So if you ask me where it is expected to go, so I would say my bet is 78. And I wouldn't say it can't go to 72. It is a market. It can certainly go to 72. But if you personally ask me as of now, I will put my money to the fact that dollar is going to 78 and not 72. Very unlikely that it goes below 72, 73, and very probable that it goes to 76, 77 in 2022. So that is the view for dollar. And I think some gentlemen asked for euro. Understand, if dollar INR is higher, okay, and euro dollar, I feel, is not going to go low substantially. So if euro dollar remains the same or some downside, dollar INR major upside, then I think euro INR will have a decent upside. For euro INR, I think 83.50 is the bottom. Or you can extend it by 10, 50 paisa more, 82.50 or 83.50, but very unlikely that euro will fall below that level, around 83 or 83.50 versus the INR. So even for euro INR, we are looking at a slight upturn. Okay, so that is on the view side. I will, again, ladies and gentlemen, I am done with my presentation. I've been talking a lot, blabbering for a long time. So I will now put the audience to put up their questions. Some questions I tried and answer, and I will try and answer a few more questions now. Okay. Mr. Goel is good presentation. Thank you, Mr. Goel, for the kind words. Thank you so much. What are the forward? Where are the forward premiums available? Okay, Mr. Goel, the forward premiums are available on our mobile application. Okay, you can get real-time live forward premiums. So you can just download the application. It is free of cost. It is there on iOS and it is there on Android as well. There are other public sources also for forward premiums, but a lot of these public sources are international sites, and international sites do not have really accurate Indian data. And unfortunately, we do not have an Indian site which provides Indian data. So our app will come in very handy for that. Next question, is it cheaper to take credit in Dubai? But sir, how will you take credit in Dubai and use in India? If you take credit in Dubai, then whatever is the interest rates, that will apply there. If you take credit in India, then you have multiple funding avenues. You have INR avenue, you have dollar, you have euro. Okay, so Mr. Goyal, what is the objective? Why do you want to take the funding? What is your question? I think if you can rephrase it, I'll try and answer that better. Mr. Pranav is saying, what is the limit of? See, packing credit limit is within the overall limit setting facility that the banks will provide you. But typically, if you are a regular exporter, then you can enhance and get a decent amount of packing credit. Nowadays, with good ample liquidity, I don't think limit facilities will be a challenge. 2022 is not like 19, 20 or 18, where getting a limit was slightly difficult, but now limit facilities, funding, liquidity are all very easily available. So your packing credit limit will be within the overall purview of the limit facilities that the bank has given you. And as I said, if you have regular exports, if you have good amount of exports, you need to define your trade cycle. Let's say you do 100 crores of exports and you have a 180-day trade cycle. Then you should typically have a packing credit 50%, 180 divided by 365 into 100, which is around 45 to 50 crores of packing credit limit. Okay, this limit also depends on what is the kind of working capital requirement you have for your business. Okay, probably that answers your question. Again, anyway, if you want to ask another question or you want to cross question my response, please write it on the chat box. I look at the other chat. Okay. Okay. Now, okay, good. How are forward premiums calculated? Mr. Ritesh is asking, is the math available to us? Sir, it is a very simple mathematics. Since it is dollar INR, the forward premiums depend on the differential of interest rates between US and India. And it is not only for dollar INR, it is for any currency pair. Even if you're looking at euro dollar, then the euro dollar premium or discount will depend on euro interest rates and US interest rates. So if I'm talking about dollar INR, then the premiums depend upon the US interest rates and Indian interest rates. So if Indian interest rates are going higher, US interest rates are stable, the differential becomes larger, so premiums become larger. So if, for example, what is happening now, US interest rates are going higher, Indian interest rates are the same, so the differential is narrowing, so the premiums are coming down. So the mathematics is very plain and simple. You just need to get the funding rates for dollar, you get the funding rate for INR, you just calculate time value of the funding rate, and that will give you the forward premium. Okay, so I hope, Ritesh, that answers your question. Mr. Mahapatra, excellent present. Thank you, Mr. Mahapatra. Thank you for the kind words. Okay, so let us. Is there any question? Okay, on the top. Okay, this I've answered. This I have answered. Okay. Okay. Okay, USD may weaken. Okay. I would say the reverse. I would say Rupee may weaken. Dollar will go higher. So dollar from probably 74, 75 or the lowest 73, 74. I feel the lowest that dollar could be is around 73, 74 or maximum 72 this year, but bigger chances of 76, 77, 78 in 2022. Okay, there is a phenomena that happens every 4 or 5 years. We expect that kind of phenomena to happen this year. So we are looking at Rupee weakening and dollar getting stronger. Okay, now Mr. Arundhar is asking, if I have an office in Dubai, I can borrow there and send. Okay, so if you have an office in Dubai, but you want to use the funds in India, you will get good funding facilities in India itself. Because taking the funds in Dubai and remitting it to India, there will be a lot of challenges in terms of regulations and compliance. But if your requirement is to get funding in India, if you are an exporter or an importer, there are decent banking facilities available in India itself. Okay, so taking in Dubai and getting it here, repaying in Dubai, so there will be multiple complexities in terms of compliance. First you avail there, then you remit here, then you get it back to Dubai and repay there. So there will be a whole lot of compliance issues. There will be a whole lot of compliance question answers that you need to give. But the bottom line is, if you need funding in India, then there is a very robust and very handsome banking system in India. You can avail funds from there. And if you need any suggestion or guidance in terms of what is the funding, most appropriate or cheap funding requirements that I can get, you can certainly reach out to us. We can explain you what, just like I explained export funding as a very good cheap option, I can explain you also the import funding options if you are an importer. Feel free to reach out to us. Okay, now any more questions here? Okay, here I have completed. There is questions here. Okay. I think there are no more questions I can see on the chat box. So if you have any more questions, please ask. We still have about 4-5 minutes left. So anyone who wants to ask questions are most welcome to ask. Yes, sir. The app is alive. That is live. It is there in Android. It is there on iOS as well. You can download the app anytime. It will give you real-time prices, and there's a whole lot of features and facilities on the application. I'm sure if you are an exporter and importer, it will give you a lot of benefit. You can explore and ideate. It will give you a lot of benefit, lot of insights it will give. It is live. So the app is live. You can download it anytime. Any more questions, ladies and gentlemen, please feel free to ask. Okay, I don't see anything anymore coming up. Okay. So I would request Rohit and the ICC team, please take this PPT and share it with everyone, because I saw a lot of participants indicating that they wanted the copy of the presentation. So I think it should be certainly given to each and every one of them.
Yes, certainly, Mr. Victor. We will definitely circulate this PPT among all the participants. Rohitji, would you like to add anything out here?
I would like to thank you, Ritesh, for the wonderful session and answering all the questions.
Yeah, thank you, Riteshji, for taking us to this very lively session.
Thank you,
yes, and I also want to thank all our participants who has joined us today. And we had shared your details, and we will also share the PPT very soon with all the participants so that they can get in touch with you directly if they have some questions. And I hope the participants will avail of the rich knowledge that they have got today, and will be able to apply in relevant applications. Thank you so much. Thank you for taking us through this.
Thank you all, ladies and
Thank you,
gentlemen. Enjoy your evening. Have a good weekend. Thank you so much. Take care. Bye-bye.
Bye.
Bye.
Thank you.